How's it going, everybody? Let me know if you guys can hear me out. Can you hear me, Wizard? Good morning. First time on YouTube, live stream. Let me change the slow mode in the chat. I wonder how I change this. There we go. Take off the slow mode. All right, so there shouldn't be any slow mode on the chat, but definitely first time here on YouTube live streaming. So if you guys can give me a little bit of patience while we get everything sorted, it'll be a little bit easier moving forward. But yeah, my name's Josh. If you guys have not tuned in previously, it's awesome to be here. Transitioning our live streams from Discord to YouTube. So moving forward, they're going to be here. But awesome. All right, let's get right into it. So I'm going to hop onto the higher time frame charts, take off a couple indicators right here so we can just get a clean read. All right. All right, so in our live streams on Discord, we are looking for this low to get taken out, right? And we had this weekly fair value gap here. Yesterday, I was looking for this remaining sell side right here. And we rated basically the previous daily low on Monday and shot right back into the range. So we did reach this sell side liquidity pool here. And from here, you'll see that there was a reaction that was pretty noticeable. So for people that have watched my live streams before, again, they know that I like to stay on side of the weekly open, right? So Monday being here. So this is your weekly open. So we ran down, we rated previous daily low. We also had SMT with correlated assets on the index futures market, that being YM. And price basically rated it in Asia, came all the way back up, closed through this fair value gap, and now we're contending with this fair value gap today. So on a higher time frame, we did rate out sell side, and now we're literally right back into this higher time frame range. The equilibrium of this range is going to be extremely important to me, right? So how we interact with that equilibrium would let us know whether or not that we want to continue higher or continue lower. I am looking at this as a larger consolidation of a market maker buy model on the sell side of the curve. So right around 25,162, about almost 1,000 points higher than where we are right now. That'll kind of be my line in the sand where I'm expecting or anticipating another reaction. Here, we have two fair value gaps here. Ideally, I would want to see us close through both of these if we want to maintain our bullishness to the equilibrium, and then look to rate out some of this pending buy side that's here. So I'm temporarily short-term bullish until the weekly open gets ran out, because I trade the weekly range expansion, right? So when the weekly open is below us, right, I want to stay on side and only look for longs. So that's the business for the weekly chart. Ideally, again, if we close above this weekly fair value gap here, then these weekly highs, you can see right here, we had all these highs that are just consecutive lower highs on the weekly in nature. So these are really, really suspect for me to take out for liquidity. And that's right around that monthly equilibrium. So what I will say is that, again, I wanted this lower sell side here. And of course, you got to stay objective in the market. Not all the time you're going to just have everything that you want in your analysis. So staying fluid is really, really important. So we did get one sell side rate here on the weekly. So I'm looking for daily buy side to be taken out. So this is like my first minimum objective, but given the fact that this is really, really close to the pending liquidity that I've been seeing here, I'm anticipating a further run to these highs. So what changes that again very clearly is if we have any sort of price action start going below the weekly open. So yes, it's a larger invalidation, but that's just my protocols for trading the weekly range expansion. So hopefully you guys don't have any questions on the higher time frame. This is the way that I'm looking at it. You're obviously more than welcome to interpret the charts how you see them, but this is how I see them. So I'm going to remove my drawings. Let's go to the 4 hour. So you can see here, this was basically Monday's low that got put in. And then right at Asia, right here on Tuesday's candle, we rated the previous daily low, had a really, really nice reaction. This also closed through this imbalance. So that's like a perfect inverse fair value gap, respected the CE, right? So first liquidity target being buy side right here, and then buy side here. So this inverse really panned out very, very nicely. And then we have this fair value gap here that we're looking to basically respect right now. So we start going below this during New York Open, then I look to say that they're going to start to trade back into some level of discount, whether it be 23,660-ish. So that's what I've been anticipating for a retracement. If they just keep pressing higher, then your next buy side is here. And that's really equal highs here. So this is a very, very nice setup. This inverse fair value gap here also aligned with the new day opening, new week opening gap. You can see that overlap right there. And price again, just one directional price action from yesterday and also leading into the overnight session today. And feel free to ask any questions you guys have in the chat. Happy to answer them. So I'm going to hide the TTFM right now. So again, for people that have watched my Discord live streams, you guys know that I like to do a liquidity analysis. And this is basically what I see as the quad box, right? So it'll have NASDAQ. And then we also talk about the Dow Jones, S&P 500, and the Russell. So let me do this quickly right here. And this is so I'm just trying to get a little bit more organized for you guys on my indicator templates. All right. So here we are with the session liquidity. So I'm using the liquidity depth indicator that we have set to the one setup for life. If you guys are wondering which liquidity pools those are, you can see that here. So Asia is 8 to midnight, London 2 to 5, New York AM 9:30 to 12, lunch from 12 to 1:30, New York PM 1:30 to 4. So hopefully that can clear up anyone that is asking what these liquidity pools are referencing. So looking at Tuesday open being here. Here's Tuesday open. So we drop down, rate out New York PM low, run up. We have Asia and London relative equal highs here. You see that at this point in time at 6:30, you have YM rating London low, and you also have the Russell rating the London low. So there's time-based S&T there, and looking for an imbalance to trade into these relative equal highs. Imbalance trades higher, never violates really the structure here as well. So you can see there's a higher low On NASDAQ, Dow runs out that liquidity again. Higher low here, higher low here. So we have two S&Ts. Fair value gap here to sponsor, and then order flow is just continuing higher. So there was no meaningful imbalance on a 15-minute chart that were basically saying that session liquidity wanted to revert into the other side of the range. So when you're getting this one directional price action, it's really important just to kind of stay on side and not look to take the other side of the liquidity unless there's a meaningful imbalance away from it. So you can see there's a clear fair value gap here. We rate Asia high. Price trades into that. Price trades into that. Just falling a little bit inside of that. Same thing here. So when you rate Asia or any kind of session liquidity, really just looking for imbalances away from that liquidity pool, right? So if we were to actually revert back into Asia low, then these imbalances would not be sponsored. They'd be closed through, and then we would have further evidence to target the other side of the range. So that's how I look at targeting session liquidity pools. They're all met with imbalances, fair value gaps. So looking at, London today, we rate out the London low here, right? Failed to do so on the Dow, do so on Russell and on ES. So same protocol, just looking at imbalances. Let me zoom in. And you can see we trade right into that imbalance here. Nice reaction away, closes through these down close candles and rate out London high. So there's your SMT coupled with the fair value gap. So you have, look, London low here. Higher low to London, right? Fair value gap here, showing that it wants to move away from London low. And then response into that 630, new 4-hour candle at 6. So it drops down, trades into an imbalance, moves higher towards the London high. So that is the overnight session. Nice continuation in Asia, transitioning into London Open. Nice London Open trade here. So right from the Wednesday price action, you can see that here. There's been no real price action below the opening price on any of the indices. So for New York Open, you guys know from previous live streams that I like to anticipate one of the index markets to trade into that daily open, right? So at least one of them, I want to see how they trade into that daily open. Not all of them are required to do that, but at least one of them. And once that one pair trades into it, I'm going to see if the pairs that are stronger, the pairs that don't reach into that daily open, if there's any kind of meaningful imbalances away from that, to just have continuation price action in trending environments. So that's the business. Give me 1 second. So let's look at a stat map. So the stat map, if you guys aren't aware, what that does is that it puts out zones, because I have the calculation set to both, right? It's the mean and the median. So this indicator basically calculates the manipulation and the distribution areas for the daily candle or any other open, high, low, or close. So I have it just set to the day right here. So if I were to go to the hourly chart, just so you can see this. So really what we're looking at is this daily candle, right? This daily candle, we're saying that through math, right, through calculations, that the daily distribution should basically start to show itself from 123 to 223. And that's on a calculation look back of 60 days, the percentage basis. So we've already reached our daily distribution. So What I'm anticipating again is if there's any kind of price action above the current high of day, we're going to start squeezing into some of these pending liquidity pools, right? But notice there's no price action below the daily open. So if there's no price action below the daily open, I am anticipating at least one of the pairs to showcase that. The other thing I want to highlight is we do have a fair value gap here, right, that we looked at when we reached Asia high. And I mentioned that, again, if you're not looking for the bearish manipulation to get hit and move lower, the opposite of looking at that would see a imbalance through the bearish manipulation level, right, to then showcase to you that it wants to reach up into the daily distribution. So that's what you have here, right? You have that hourly imbalance, trades into that. So when you break a bearish manipulation level, if you are continuously wanting to see higher prices, that's a great sign. Trade into that. Also a great sign, doesn't close through, and then just runs to the higher end of that. So stat map already basically showing you the high of the day that is currently in place in the market. It doesn't mean that it has to stay in there, but as of right now, that's what we got. This right here is the dynamic RTH gap, and this is the developing gap. So what you see here in this orange color, right, that's the lower end of this, and then where the current price is. So this is showing you the RTH gap basically before it happens and how it's adjusting relative to the current price. So we are opening up with a bullish gap today, and I want to see again if we're able to rebalance into this gap and how much of it. Typically, again, I'll see at least 25% of the gap on a healthy basis get traded into, but obviously breakaway gaps still exist. I use both daily opens, the 1800 or the midnight. So you'll see that this is midnight open here. I have that plotted. And we also have the daily open here that's plotted at 1800. I'm going to remove some drawings. The last thing I'll explain so everyone can just be on the same page is that there's these light yellow boxes here. And really what those are, that's the first 30 seconds of New York open trade at 9:30. That's the 30-second opening range. Predominantly, that concept is taught by the PAX trader. PAX trader, if you guys have not seen any of his work, but excuse me, he is a NQ, ex-NQ floor pit trader. So he used to run the NQ pit and be one of the largest participants in the futures market at that time. This is one of his concepts, and I predominantly use it in my analysis to help me with short-term bias and also understand the magnitude of the 9:30 open. So that's what these boxes are here. A lot of people ask me what I use them for. I use them mostly for imagine pivot points, like classic support and resistance. The easiest way for me to look at that and showcase it. So this is a good example here, right? Support broken turns resistance, support broken turns resistance. So bouncing at these levels here. So there's always some short-term trades that you can see from these 30-second opening ranges, right? And I also use them for a bias. So the way that I use them for a bias is you see I have the weekly open here. If we're above the weekly open and we're above the 30-second opening range, I call that, my bias confluence. So when we're above both, I am bullish. And if we're below both, then I'm bearish. If we're in between the current day's 30-second opening range and the weekly open, I have a more short-term bias that's just scalping on the day. So when we have them both in agreement, as you see here, that's a nice trending directional price action move, right? So when we're below both, right, you can see here, look at my cursor, below both, that's when we really have that bearish price action. We go back above them, price starts to consolidate and chops around intraday scalping. Above both, bullish. So I think I've answered everything so far in terms of what's on my charts. I'll do this pretty much all the time that I'm live streaming, kind of just explain what I'm looking at. But you have session liquidity here, right? You have your stat map, developing RTH, TTFM indicator. It's basically showing me my higher time frame candles coupled with change of state deliveries. So that's what I got. If you guys have any questions, then at this moment, we have about 2 minutes before the open and kind of just let me know what you guys are thinking. But immediately, I can tell you that I am looking for at least one of the assets to trade into the daily open or midnight open. And then from there, I'll look to see what I want to do with price action. We're just going to wait until 9:30. It's about a minute. And before the market opens, it's very important that you guys understand that this is just for education and entertainment purposes. Important that you read the disclaimer and understand that you trade at your own risk. Yeah, the orange boxes, those are the 30-second opening range. So let me show you that here. 30-second opening range. This is the yellow background. Again, I'm just looking at this, which is the first 30 seconds. See, look, we just opened up right here. And as the first 30-second candle is printed, this box will plot. So look, now 30 seconds has already been into the market. And really now what you'll see is that this box will just stay as it is. It's not going to update or anything because the first 30-second candle is this candle right here. And this candle's high and low is what's being annotated in that box. So if you like rewind the stream a little bit, you can basically see how I use it. I use it for a short-term bias and for pivot points. Pivot points, again, just kind of looking at it as like classic support and resistance. And for bias, I want to see them in agreement to the weekly open, which is here. So if we start having any kind of price action above here, I'm short-term bullish. If we have any price action below the 30-second opening range, since we're conflicting that we're below the 30-second opening range and above the weekly open, then I hold like less of a hardline bias stance. Yeah, so I ideally want to see at least one pair trade into the midnight open and or the daily open, which is here. And until that happens, I'm not really too interested in price action. London high has been neutralized on all assets. So basically any pending liquidity that we have, once we go above the current daily high, is just further higher time frame targets, which again, we can go over that just very quickly. But again, if we go above the current high, then we're really looking for these resting highs here, which is about 400 points above us. So quite the range. And you can see here that I mentioned that 25% of that fill. And that's what we just got right here. So if you use that dynamic RTH gap and kind of just put it out in quarters, that 25% is really what we just responded to. So all the indices as of right now, they're pushing up higher above their 30-second opening ranges. So on a short-term basis, again, I'm looking for price to trade into some of these wicks. And these wicks are from that, I believe we had 8:30 news or 8:15 news. So that's kind of this price action right here. So it looks like Russell's already trading into that wick a little bit. How we interact with that wick is going to be pretty important to me. So we start going above the 50% of this wick right here. Then I'll probably look to say that I want to see price squeeze and reach up to that current high day. So today we had 8:15 ADP non-farm employment change, and we also had core retail sales and retail sales at 8:30. So those were kind of muted, and at 8:40 is when we really saw this volatility. So I am anticipating at least some level of price to trade into these kind of wicks. So you can see here, we just talked about this wick here, and that pretty much reaches that 50%. So any kind of price action above here, again, would look to have price start squeezing higher. You can see here again, 50% of that wick, price response to that here. So we really want to see a body close above the 50% to really continue with higher prices. Otherwise, we're just kind of going to get a retracement, and then these highs should basically remain while we look to rate some local sell side. Is the stream lagging for anybody? Just let me know if it is. First time streaming on YouTube in quite some time, so I want to make sure everything is best that I can make it. Okay, we'll keep that in mind. Now, the thing about Discord is that there's no like delay, right? On YouTube, there is inherently some level of a delay. You're streaming to an external platform, so just have something to keep that in mind. Okay, keep that in mind. So Russell is kind of showing me that it wants to take out this pre-market high. I would like to say that the Russell also had a lot more magnitude on the open than did the Dow and NASDAQ. So I want to see the Russell really look to take out this wick and this wick. So notice when we trade into the 50% of this wick right here, price kind of has a small little retracement. Next candle open low, and then starts to trade higher than this. So as long as we're staying above this candle's low, right, I want to see this gap stay open. It could be a very, very shallow retracement into it, but ideally want to see some of this gap left unfilled so we can just run up into these highs. Nasdaq's also trading into some of this wick now, so that's also a good sign. If you look at the lower time frames on the Russell, like we're just sponsoring order flow. For analysis purposes, I really like to stay on the 5-minute for reading the New York Open. The 1-minute chart can get a little bit, you can start to see a lot different things on the 1-minute, but if you remain on the 5-minute for the New York Open, then have like a lower time frame chart either to like your left or right or on a split screen, it will definitely help you out. So notice I was originally looking for midnight open, right, for one of the assets to trade lower, but when I don't necessarily like get what I want, right, in price action, I just got to stay fluid and objective, right? So if we are all then pressing above the 30-second opening range and we're above the weekly open, I want to just stay on side with the current tide, right? And if the current tide is just we're pressing up higher, then I don't necessarily need to fight to say that this retracement lower is going to happen. I would like to see it happen, but it doesn't have to happen. So we just rated this candle's wick high on the Russell. So again, ideally, I want to see this imbalance stay open so that we can just run out this high. Notice how the ES, NASDAQ, having a lot more, like let's call it, it's a lot easier for them to retrace down into this previous candle while the Russell is really maintaining their candle's strength. So I'd like to see this high be taken out right at the 950 macro, maybe a little bit before. But Russell's looking pretty nice right now. And you can see also like Russell traded into its gap the least, right? It just kind of had an immediate reaction away from the gap. So those are some of the things that I'm looking at as well. You're seeing this RTH gap here. I'm trading into at least 25%. The Dow didn't trade much into it, but it had a failed basically close above the 30-second opening range. And then same thing here. It kind of traded into that gap a little bit, but notice the Russell. That's why my attention's been there so far. So you can see right here, we only traded into it, basically not even a point. So that's being left unfilled as of right now. And if you look at the lower time frames here, just so we can look at it, see 930 immediately trades down a little bit into it and then just presses up higher. So you look at a just lower time frame chart, right? An imbalance, close through, sponsored. So we should start to really start to take out this high, but these are trailed stops now that are just taken out. So let's see how they interact with this gap right here. I go through the gap low. I'm sorry, the 30-second opening range low, then I just go back to neutral stance. So you're gonna hit that 50%, that 30-second opening range. So again, anything lower than this right now on the Russell will pretty much spell that it wants to consolidate before running out this high. So NASDAQ just gonna go sideways until further notice, to lower, at least to the midnight open at this point. We closed through this opening range imbalance, so that's not really a good sign for continuation higher. So it looks like the original plan of midnight open might still be in the cards. So just falling short of this high right here on the Russell, coupled with this imbalance, I really still ideally want to see this imbalance stay open, at least some of it, and then still to press up higher. And this just being a run on stops. And again, being wrong is basically just violating the 30-second opening range at this point, and then kind of just coming back into this gap. So we just took out that low, that EQ, the 30-second opening range. So I'm just going back to neutral stance, not necessarily anything that's like too pressing. I want to see this fair value gap stay open before we take out these highs, and we didn't get that. So my attention's back to midnight open. Does anyone have any questions so far? Whoops, this should be the Dow. Don't know how we got to the Russell there. So Dow's really close to London low at this point. That's likely a liquidity objective that I'll reach for. So here we are at the 950 macro. It's basically the last transition before the new 4-hour candle. So primary objective right now, it's looking at this London low right here on the Dow. Very, very close proximity liquidity pool. Should get neutralized. Just waiting. Pretty good response back up on the Russell here. So definitely more of a mixed open today. We had a pretty large run up overnight. So we could just keep consolidating and chopping during the New York Open. So that's always a possibility. You have that large overnight. Pretty much give it the first 30 minutes, and if we're not moving, we're likely just going to be chopping sideways. Daylight today, very, very important just to stay patient. The only trade that stood out to me was that basically the 30-second opening range to just look for a bounce higher. They failed to do that initially, came back above on the Russell to do that. So really, again, if they're going back below the 50% here, then I'd say that lower prices for Russell might be in the cards. The Dow got really close to London low, kind of just retraced back into this fair value gap here. So if we flip this fair value gap, that's going to go back to being in a consolidation. NASDAQ just really just responded to this rejection block. Nothing else for me to really say about it. And ES just kind of the same thing. Trade into the rejection block, just peeled lower a little bit. So not a whole lot to talk about as of right now. Still pretty suspect to me on the lows here for the Dow being the weakest pair out of the gate. Traded into its gap the most. So still a little suspect to see London low maintained for the day. Yeah, this is just a pretty slow price action at the moment. Not a whole lot going on. There's not a lot going on, not much for me to really say, right? So here's that 10 o'clock candle. Those are really suspect highs right here. So the Russell should start pushing soon. So there's those highs. I want to see some follow through here on the Russell. Just kind of take out these low resistance highs. Dow's just going nowhere right now. NQ is really ideally just still consolidating inside of its 2 to 10 o'clock range as of right now. Just consolidating. Russell's the only one that's showing me that it has some willingness to move higher at the moment. Patience. So yeah, pretty tight markets right now. The Russell just rated out these highs, but it doesn't look like there's going to be any kind of follow through as of right now, but that could change. Today's more of like a test stream for YouTube, and I'm going to be ironing out any kind of problems that were occurring on YouTube so that our next streams are perfect. Started trading above this high on NASDAQ. Want to see if there's any willingness to trade into this wick CE, and we can get any kind of follow through or an imbalance through that wick, then we can start going higher. You can see that we had the the raid here and then also the raid here. So TTFM conflicted right now, also consolidated. So the Dow peeling off that a little bit. So this is what I mean by like classic support and resistance. You guys can see it's like come into the 30-second opening range. Body's looking to respect the CE. There's a bounce here. Wicks respecting here, 50%. Move lower, 30-second opening range, bounce here. So it's like, that's how I kind of am looking at this. They're just like pivot points for strength or weakness. So we're going to be doing some giveaways in the Toodegrees Discord this week. So if you haven't joined already, be sure to join the Toodegrees Discord. We've been doing some prop firm giveaways in there. We also do some tool giveaways. Appreciate you, Dragon Trades. Just looking at a consolidated market right now. Not rushing into anything. I do see that there's a small willingness for NASDAQ to look to trade back into some of these wicks. So that's like a short-term bias that I got. We're above 30-second opening range. We're above the weekly open. So still in the weekly range expansion. And, you know, most of them are all above, right? So still short-term bullish. This is the type of price action where it's like headline driven. So it's like if we're going to get a headline, anything on like global front, then what's going on in the world, that can clearly send an imbalance away from this consolidation. So be mindful that that could happen. Very muted price action though so far. Not a whole lot. All right, so this is the second willingness that I'm looking at in terms of the Dow that it might want to trade back into London. But again, what changes that is if we just start closing above the 30-second opening range. So the Dow clearly the weakest. You can see how it's responding to the 30-second opening range. It's, again, the only one that's below it, and also has resting liquidity right here at London. So those are the reasons that I'm looking at that. It also had a sweep TTFM. So this candle should start sending us lower. Russell, no follow through from rating those highs. So back to neutral here. Very consolidated of the day. Failure to just expand right here. So not a whole lot. Not a whole lot. But let me know if you guys have any questions. Happy to answer them. London low, still very, very tempting on the Dow. A lot of resting, built up liquidity here. Daily fair value at locked-in levels. Let's take a look. Yeah, basically just consolidating inside of these. Very, very muted price action. No fall through after 9:30, 10 o'clock, still in a consolidation since then. Kind of last line for volatility will basically be just after 10:30. It's after that first initial balance is basically created, and seeing if we get a break or a false break of that initial balance. Yesterday I had a really, really nice false break of the initial balance coupled with some SMT. I know a lot of people in our Discord took that trade. Can kind of review that real quick because we're not going anywhere right now. But that was here. You can see 9:30 here up to 10:30. So this high and this low. False breakout here, change day delivery, beautiful TTFM short, target 9:30 low. Very, very simple framework. But that was the trade. A lot of people took that yesterday. And another sign of look, just classic support and resistance. Support here, 30-second opening range, imbalance, bounce, change day delivery, and then continuation to New York AM. So that was really, really nice trade yesterday. Definitely a day to stay very patient. One thing I will note as well is that because we had that daily distribution, it was already hit here. There's, again, until we start closing back above here, the daily range on a mathematical basis already been capped. And like if you also look at the average range levels, you have that confluence right here. So basically over 210, we've already fulfilled that daily range. I would just be surprised today to see London low stay on the Dow. Anything could happen, obviously, but that's still a streaming target for me. And really just start going back above here. We'll just change that. Video has a 5-second delay versus audio. Okay. I'm going to look to see what I can do about that. Change that up. Obviously, we're currently live right now. So this is like the first live stream in quite some time. So I'll look to see what I can do about that and see how things can change. Tough market for anyone that's looking to rush into a position for sure. This is 2 inside bars at this point on the Dow relative to this candle, which just really shows that compression. Pretty boring price action. I'm gonna give it until 10:45 to see if there's any kind of willingness to move. Otherwise, we'll probably end the stream around then. When New York AM consolidates, it could be a surprise move that happens during lunch, and that's something to be mindful of. Because typically, if lunch consolidates and New York AM, has its move, then that's like a normal delivery. If we're having the opposite of that, then basically, if New York AM consolidates, then lunch should provide a more volatility, to say the least, and raid some New York AM stops. So it looks like NASDAQ is starting to creep up into this rejection block. We're also showing that respect right now. Let's see how these candles close. Monitor the 50% of that wick. We just tagged that. So not a terrible close here on the Russell. 1020 low should be maintained for higher prices. And Dow looks still like that London low can get ran out. Here comes the Dow. So definitely when you see these type of wicks from news releases, definitely look to grade them out. Look at the 50%. You're going to be pretty sensitive. About 3 minutes till the first hour of trading is set for that initial balance. And then looking for at least one of these assets to break the 930 to 1030 range. I'm liking the Russell still to take out these highs, consecutives. All right, here we go. 1 minute. Got to be super patient on a day like today. Definitely deleverage as well. So 1030s here. So mark out that 930 high. So this range right here is what I got seen on the Russell. And this is what we see. I'm going to make these a different color as well so they stand out. Let's do blue. So this first hour is very consolidated. So you can see again, Russell's closest right now, as well as NASDAQ to rate its high. So I want to see if there's any follow through after breaching this initial balance, right? See, that's just broken right here. Let's see if there's any follow through. If there's no follow through, we start going below this candle's low at 1020. Then I'm probably just going to end the stream. It's just going to be a consolidated session that I'm not really looking to participate in. But so far, again, you have the break on the Russell and then the break on the NASDAQ. So yeah, that 1020 candle is going to be pretty important on the Russell and the NASDAQ. I want to see those candles stay untapped so that we can at least run the initial liquidity here at 24,246 on NASDAQ and 25.47 on Russell. Yeah, so if we don't get a 5-minute close above this, not necessarily the best sign for continuations. So just be mindful. So no follow through in the initial bounce. Kind of reminds me of the setup we had yesterday. So I think I'm going to end the stream here. Not really anything too exciting, and pretty much just got a failed breakout of the initial balance, and we're just back to consolidation. So hopefully you guys found it insightful today, and we will be doing more of these streams. I'm going to look to iron out any of the issues that we had in terms of the delay, and we will get back to regular scheduled programming. So wish you guys all a great rest of your day. Take it easy and be well. Bye-bye.